We're ready to get started with today's webinar. I'm Allison LaForgia, the Senior Webinar and Events Manager at HousingWire, and our topic today is Learn from Lenders how to navigate through this challenging market through tech. Today's webinar is brought to us by Black Knight, and a few housekeeping items before I turn things over to the panelists to get started. We will be having a Q&A session towards the end of the webinar. You can submit questions at any time by using the Q&A icon at the bottom of your screen. The webinar will be recorded and will be available on demand at housingwire.com under the webinar tab. Now, today's webinar will be moderated by Sean Dugan, who is the Senior Managing Director of Origination Technology Sales at Black Knight. Sean, I'm going to pass things over to you to get started with today's content.
Thanks so much. Really appreciate it. And welcome to today's webinar, which is around navigating the current market through technology. Really pleased to have two friends of mine, also clients, join us today, Mr. Blair Sermon with Citizens Bank and Shane Patnoy with Washington Trust. To start things off, I just want to, I'll introduce myself, I'll have Blair introduce himself and then to Shane, and then we'll get into it. So again, my name's Sean Dugan. I am the Senior Managing Director of Sales for Origination Technology here at Black Knight. I've got about 20 years of experience specific to the loan origination system marketplace, really just working for two specific providers, the past 12 years of which have been here at Black Knight. So my responsibilities are specifically the overall sales and business development effort associated with the Empower Loan Origination System. Blair?
Great, thanks, Sean. I'm Blair Sermon. I lead product management here at Citizens Bank. I've spent about 19 years leading product and technology teams in the financial services industry, primarily focusing on mortgage and home equity. I live in Dallas, and I'm really excited to be here. Thanks so much, Sean. I'll hand it over to Shane.
Yeah, hello, everyone. I'm Shane Patnoy, the Director of Mortgage and Consumer Lending for Washington Trust Bank. We're located in Spokane, Washington, worldwide headquarters. I've been with Washington Trust Bank 14 years and been in banking and financial services for almost 30 years. So working with technology has always been in my been part of what I've had to deal with. So it's great to be here, Sean. Thank you.
Yeah, thank you both, gentlemen. So let me set the stage for today's discussion. To nobody's surprise, we're in a down market. So I know we're getting a lot of this information, seems like every webinar or trade show or economic forecast you attend, the message is the same. I do want to briefly bullet point kind of what the state of the union, if you will. So after more than 2 years of record low rates, we now find ourselves in an extremely short span of time with the highest mortgage rates that we've had since the early 2000s. The result is that we're at a 25-year low as far as volume for originations is concerned, and a 35-year low in terms of affordability. So as rates have doubled, and while they're still well below the long-term average of 7.76%, the important thing that we're all dealing with is that most people who could refinance and were interested in refinancing most likely have already done so, which suggests the remaining pool of in-the-money refi candidates is less inclined to act. So as we all know, this has had a really dramatic effect on loan production. So according to our most recent Black Knight Origination Market Monitor, the purchase locks in September were down 10% from August, and as of today's report, actually 60%, down 60% year over year. Rate term finance refis, rate term refis finished September down more than 93% from last year. And refi locks currently account for only 16% of the pipeline. That's the lowest share on record. So that's the market we're in today. But let's take a quick walk down memory lane. Only 14 months ago, we were enjoying the lowest rate, highest volume, highest profitability market that any of us had ever experienced. We had the lowest rate cycle in history, which coincided with a global pandemic. Home ownership and home finance were never more important. and all of us within the industry were hiring as many people as possible to assist with the fulfillment process. We were doing everything we could to maximize this once in a lifetime volume and profitability opportunity. And that really brings us to today's webinar topic. Given the cycles that we experience in the mortgage market, both past, present, and future, we know that they will occur in the future. How can lenders evaluate, select, and deploy technology that will reduce the costs and the disruptions which these boom and bust markets represent? So those are the talking points, and that's the framing for today's presentation. So let's get into it. Blair, I'm really interested in your perspective on this, and specifically, how did you or did you not leverage technology to get through that past boom market? And did it work for you? If so, what were some of the results?
Yeah, absolutely, Sean. It wouldn't have been possible without both existing technology that we had, as well as implementation of new technology at that point. It's interesting, we focus on the positives of that, right? With the rates being so low and home values being high, the number of customers in the money was, all times high. It did come with some pain points though, right? For operations and sales, in that you wanted to allow as many of your customers as possible take advantage of that situation. And that created some opportunities for us, specifically opportunities around cycle times and other things like that. We deployed specific technology solutions to help us with that sort of two-pronged approach. One was prioritization and ensuring that we were working on the right files, the ones that were progressing through. But the more important one, in my opinion, was transparency and communication with our customers. Customers were very specifically refinance customers were really, they were understanding of the fact that this is going to take longer than it normally would, provided you were clear and transparent and communicative with them. So we actually deployed quite a bit of communication strategy with those customers to say, hey, this will take longer than normal. You're locked in at a good rate. We're going to hold your great rate, right? Just help us see this through. And then we followed up with them on a regular cadence throughout that cycle. And that really helped our Net Promoter Score stay high, despite extended turn times.
Yeah. So, I mean, rather, that's leveraging technology, right? To put that status information in front of your clients and really diminishing the need for a client to pick up the phone and call, which of course is not a great use of anybody's time and really hard to manage. Is that correct, Blair?
That's right. That's exactly right. It was taking the information that we had available in our systems and exposing it to customers in ways that allowed them to see, hey, this is progressing. It's just going to take some time. And it reduced the sort of urgency and anxiety that they had with it taking a little bit longer by creating transparency for them. So that helped quite a bit throughout that period.
Yeah, appreciate that. I'll go to Shane. And Shane, you've got an interesting story just with Washington Trust. I mean, everybody's focused on borrower satisfaction. I think your organization might take it to a different level. And so can you talk a little bit about the impact that technology, specifically the Empower loan origination system, had on both your ability to participate in the high volume market, but also what impact that had on your borrower satisfaction levels?
Yeah, Sean, thank you. So we're a regional bank. We've been around 120 years. And to say that borrower satisfaction is the pinnacle of what we do would be an understatement. It is everything in how we approach our customers and our business model and our philosophy. So we use an NPS, Net Promoter Score system, and our Net Promoter Scores were the highest that they've been in our history in the last 2 years, which we really felt going into 2020 that this was going to be the exact opposite, or at least we'd be taking some sort of hit on that because we moved everybody remote. Volume went through the roof. From 19 to 20, we doubled our volume. And with the technology, we were able to only hire 2 people. And that spoke volumes for for me and talking to my senior management about where the efficiencies are and how we grow without spending more money, throwing more bodies at the problem of increased volume. We all live in these cyclical markets, and typically you're going to throw as many bodies as you can when volume spikes. We didn't have to do that, and that was new to us. So that was interesting that the technology allowed us to do more with less. And our net promoter scores, we're over, for those with NPS and net promoter, we were close to 85 the last 2 years, which is huge. That means, over 9 out of 10 of your customers would say that you're doing an outstanding job. So really, it was a remarkable story that we did what we did given the circumstances. But again, when you throw everybody into the pandemic and you move everybody home, we definitely thought there was going to be some holes in how we delivered that customer experience, and it was the exact opposite. Reliability of the system and on the system helped us not only achieve our highest NPS scores, but also really allowed us to use the people we had and not overburden them, if you will. And we didn't have to throw a bunch of bodies at the problem, which was unique to any other business boom that we've had in the last 15 years.
Yeah, that's a pretty amazing story. I mean, your volume probably, I'm going to guess that you must have doubled, if not more. And you only hired 2 additional FTEs, and then you also saw the satisfaction scores actually increase. I mean, that's quite a testament to your organizations. Really, congratulations on that accomplishment. Well, that was a boom market. It's not the market we're in right now. I think we all know that. And so we're in this down market, and we're talking about technology and making investments. And it's kind of like buy low, sell high. It's easy to say, it's harder to do, because there's a visceral reaction of making investments in your business when simultaneously you're laying off employees and you're making other substantial cuts to the business. Yet you need to invest in technology. So Shane, this one, I guess I'll start with you. Why do you consider it so important to be investing in technology, even in a down market or during these recent shifts in the market?
I'll say this, time can be your friend or your enemy. And right now, time is our friend. When you think about a boom market, we really don't have a lot of time and resources to go out and analyze and make decisions and really get a good feel for what changes you need to make. And some of the changes you make in the boom markets, they're made out of necessity and are not always the best decisions. Right now, I'm sure just like us, most lenders have a lot more time on their hands. And it's the best time, in my opinion, to look at technology, look at resources. You have more resources than you've had in the past. And you can make better decisions for your organization, both short-term and long-term, because you're not under the gun and you're not inundated with loan files, and people aren't doing more than just the job that they were given. For us, testing, analyzing, and doing all these things, you've got your processors, underwriters, loan officers doing extra work in these times of the boom times when you bring on new technology and bring on new projects. Not many people have extra resources in our world. And I've said this before, if you're in the mortgage business, when you're right-sized, you're probably a little bit understaffed. So right now we do have the opportunity with a few extra staff right now. And so we have the best time and best opportunity to analyze and look at technology and make decisions for our future, because there will be boom times again. I don't want to be making those decisions in the middle of what we went through the last 2 years. And so I think that's how we're approaching it.
Great, thanks, Shane. Blair, any thoughts on that topic?
Yeah, I fully agree with Shane. And in fact, I'll even double down on it, which is I love that time can be your enemy or your friend. In this case, it does feel like your friend, specifically for, just as abruptly as we left that boom, right, into the market where we are now. We can still remember the soft spots that we had, right? The things that didn't quite go the way that we wanted them to. while we were, inundated with loan volume and the areas that maybe were just a little bit harder than they should have been, or we got the job done through Herculean effort. And those are the ones that we can right now focus on because it's fresh in our minds. We have the folks that dealt with that and managed through, not supported perhaps by the technology that they needed to be for those specific scenarios or use cases. And they have availability, to Shane's point, right, to help us with the problem solving and the ideation and ultimately the testing and yes, this will satisfy exactly what we need. In addition to that, depending on the size of the changes that you're making, change management is hard for folks, right? It's any change is hard. Even I actually, oddly enough, find that it's harder when you're moving somebody from something that's not very good, but they're comfortable with it, to something that's better, but they're not comfortable with it. There's sort of this pushback, right? Of this is hard. It's easier if you can ease them into it. You cannot ease into anything during a boom market. So right now it allows the time, right, for that type of change management to happen. The only other thing that I would add is, a lot of the reasons that we make some of the changes that we make, those reasons are driving towards efficiency or automation, customer service types of things. They're the same reasons, whether you're in a boom market or a down market like we are now, but the outcome is different. I'm still driving efficiency and automation during a boom market, but for the purposes of helping more customers take advantage of the great rates. In a down market, it's so that I can help drive down the cost of the loans that we're originating, right? So that I can, as much as I possibly can, pass that on to a customer to help alleviate the gap concern that happens with increased rates. So the work itself for me and for Shane and for others, it's really the same type of work, but it's the what for is a little different in these two different markets.
Yeah, yeah. From my perspective as a technology provider, one of the things that I see the opportunity for, like we already mentioned, right, in a boom market, you're almost held hostage with the technology provider that you have. You can't make a move at that point in time. Otherwise, you turn your back on volume and profitability objectives. And so now is the time where you can actually step back and take a look at your processes and almost like a process re-engineering effort, which nobody had time for in the previous market, and identify what those bottlenecks are and document what those workflows are in your current fulfillment process. And then, really articulate what it is that you want to do to remove those bottlenecks. Now you've got your workflow. Now you understand this is what I need a technology provider to support. You've got a blueprint and the ability to go out there and deliver and document, articulate that, and know in a finite perspective who can and can't support your future processes is something that we've seen. The most successful engagements that we've seen have gone through some level of that process. So thanks for that. All right, I'm gonna switch gears and talk about tech stack. So again, from a technology provider perspective, a lot of discussion about reducing a lender's tech stack, reducing the cost associated with vendor management, cost and complexities around managing integrations, technology releases, and of course, vendor maintenance, pardon me. So Blair, what are some strategies that you've deployed with regards to your evaluation of the vendors out there, the selection, the deployment, and how those align with citizens' requirements, and I think from a culture perspective as well?
It's a great question, Sean. Actually, though, we'll take one step earlier in that process than the vendor conversation, which is we've spent quite a bit of time talking through and continue to talk through what items do we want, do we need to improve upon within our tech stack, and which ones do we want to build versus buy, right? I spent a lot of my life working at Capital One. Capital One is a technology company that's trying to figure out how to lend people money, right? That was the whole deal. It's great to work there. That was wonderful. It's wonderful to work for a bank, though, because we know what our strengths are and we know where we want to actually leverage partnership. So we choose to build the things that we want to differentiate ourselves on. So, for example, we built our own products and pricing engine because we wish to use that products and pricing engine across all of our consumer lending products, not just in mortgage, but in the other consumer lending products as well, because we want to have a single sort of 360 customer experience for all of our consumer lending. But I will never build a workflow tool, right, or a orchestration engine type of tool, reporting type of tool, because it's one of those things that I actually would prefer somebody else. In this case, we partner with Black Knight on our loan origination system. I would prefer Black Knight to spend time thinking about and ideating the best way for that. That I want them to be the key differentiator for that for us. The outcome for it is I actually end up in a situation where the things that previously I needed to absorb a tremendous amount of our capacity to do, regulatory changes, maintenance upgrades, things like that, I don't have to now. I mean, I still have to test them, right? Because there are some key differentiations that we have within our stack, but the effort and money that I put into that type of thing is far less than it was previously. And that went into the decision, right, about how do you want to create your tech stack. One of the things that we really live by here is I want to, for the things that I want to buy, I actually want to have deeper relationships with fewer vendors. So we actually seek out vendors that can solve many more of our problems, than individual pieces. This is a shift in my mindset, though. 3 or 4 years ago, my mindset would have been very compartmentalized, where I want this specific solution solved here and this one solved here, and I want to stitch it all together. And that felt really good to me. I've changed. I don't know if I'm just getting old and grumpy, but I've changed where I'd actually prefer to deal with a handful of vendors that have together figured out how to make things work well together. And ultimately, it's one less thing that I have to really concern myself about. I need to know that it works, but I don't need to actually force the conversations to make it work. And that's really driven a lot of our decisions.
Yeah. So credibility and stability being kind of key strategic points there, right?
Yeah, table stakes, right? I didn't mention it because it's table stakes, right? But oddly enough, Sean, it's actually a topic that comes up in a lot of our conversations when we're interacting with. There's a lot of wonderful ideas out there. I go to a lot of the Digital Mortgage Conference and MBA and others, and you see a lot of great stuff and wonderful ideas. But I also always have to question, do I want to engage in something that I may be stuck holding and isn't long-term? So sure. Stability and longevity is surely part of the decision-making and the table stakes for us.
Yeah, thanks, Blair. Shane, how is Washington Trust thinking about the vendors that comprise their tech stack and the future of the business in that capacity?
We are a little bit different than Blair and his organization. When it comes to technology, every company, your strengths, your weaknesses, right? And we tend to run a little leaner on that support and that IT side. So we're not building those things as others may. So we do rely on going out and finding good quality, reliable vendors to help with our technology. We want simple, easy to use, easy to manage, maintenance on the more minimal side of things. We understand that with releases, they're going to be some are going to be very large and some and onerous, but at the same time, we have built our support, to make sure that we have that support with each business line within the bank. But we don't have an abundance of staff to go out and say, we can compensate for problems that the vendor comes up with. We really do need reliable vendors. And I would say that, like Blair, we want deep, meaningful relationships. The vendor management process today is very difficult in the world. And so we want to minimize the number of vendors that we have out there. And for us, it was really important to have an end-to-end system that would allow us to, from the start of the application to funding and shipping, that we could be in as little systems and use the fewest amount of logins, if you will, to get our loan funded. And really, that was important to us. And it is important to us today, and it'll probably be important to us in the future as you look at, margins compressing and in various spots within the financial industry. We want to spend the right money on technology, and for us, making sure that we had the best vendors available, and the roadmap was important as well, making sure that what was coming they could support, and that we weren't going to be a couple of years out going, well, we didn't think about this, and now we've got to find another vendor, another solution for it. So I'd say ultimately, Blair, you mentioned table stakes. Couldn't agree more with that statement. We want a vendor. We want all of our vendors to be. We want confidence in those vendors that they're going to deliver what they say they're going to deliver, because we don't have the extra resources to pick up slack if they don't. And to some degree, that does put some risk on us. But we do a lot of due diligence before we jump in the water. So.
Yeah, I think that's one of the things that makes Black Knight unique with regards to our product strategy. I think everybody's seen us on an acquisition spree over the last 4 years or so with a lot of really key strategic acquisitions, mostly origination focused, and the concept of coming to market with all-in-one, your entire ecosystem, which in and of itself is not an original idea. Other vendors have done that, but I think what separates it is they're very much best in breed. The components that make up the ecosystem are best in breed, whether that be Optimal Blue from a pricing engine perspective, or most recently Surefire for a CRM. So Shane, when we come to you, we're coming with best in breed, all the components start to finish. What makes it unique, though, is where Blair has something that makes Citizens custom, like the pricing engine across his entire enterprise, the ability to plug in, leveraging APIs, and leverage that custom component. That's something that's pretty unique from a Black Knight product perspective. So thanks you guys for pointing that out. We'll switch gears yet again. And this topic is more about efficiency and automation, which of course we talk about all the time when it comes to lending and mortgage technology. And we're all trying to do more with less. We're trying to serve the right work to the right person at the right time. And again, kind of the buzzword, kind of future proofing your business for the next market cycles. So Shane, I'll come to you first. And just big picture, how are you leveraging technology to make yourselves as efficient as possible, getting through not only this market, but also preparation for the next potentially upward market?
Yeah, Sean, when you look at your process end to end, there tends to be a lot of redundancies. And one of the things we wanted to focus on is the workflow. And one thing we really have leveraged and utilized is the task-based workflow. You mentioned it, serving up the right process or procedure at the right time for the individual to do their job. And that's been huge for us. The stare and compare aspect of what we do, with document classification and AI, those things have really helped leverage and streamline our processes. And so, in situations where you had people in your operations doing one task and then the same person downstream doing the same task, that's a time waster. And we analyzed every part of our process to see where can we stop that. And with the technology and with task-based workflow, you've got to rely on it. Blair, you mentioned it before, as when you implement a new technology, and it could be a great technology, but it comes back to that book, Who Moved My Cheese. You've got to trust the technology, and that was the biggest thing for us is making sure that that the system is working. You let the system work as intended, and with these workflows, we have seen some tremendous increase in efficiency for our people, and people can stay in their lane, so to speak, and not have to worry about checking the checker and making sure that the person before me did their job. So I think that's really one of the key points for us is just leveraging the technology to make sure everybody's doing what they're supposed to be doing, and nothing more, nothing less.
So Shane, do you find with that task-based workflow that your employees have the ability, instead of doing, this, being responsible for this much work, being able to kind of specialize and say, okay, hey, these are the tasks, these are the areas that I'm really responsible for. I'm going to get better at it. I'm more efficient. I can make better decisions quicker. Are those some of the results that you're seeing within your organization?
Yeah, absolutely, Sean. When you think about it, if you have someone with, 20, 30 files that they're working on, it can be overwhelming. Where do you start? What do you work on today? I think in previous times, going way back, it was all paper. Well, coming into the technology age, you've got to trust that the workflow is going to drive you to the next decision. And it does narrow their scope. It narrows their focus, and it serves up what needs to be done next. And for us, that's huge. And that's how, from my opinion, that's how we were able to do more with less. You didn't have people overwhelmed by these enormous pipelines. And where do I start? Where do I go? And who's closing? Who needs to close first and what priority? It really does serve it up so that the employee is working on what is most important at that time. And it does absolutely narrow their focus.
Yeah, makes sense, Shane. Blair, you got your own perspective on this. You larger organization, larger footprint, more employees. What was the impact for citizens?
Yeah, similar to what Shane's saying. The only nuance that I would add, which we've experienced, is, obviously right now we're all in a situation where overstaff and things like that, but ramping up to that boom that we had, right? And I didn't have the same experience that Shane had with hiring two colleagues. We hired a lot of colleagues, and although we will, through the course of better processes and better technology, buffer those edges off, right? So that you don't need to hire as many or let go as many, right? That you won't have to do that as much. I think we still have this need, or will have this need of that ramp up. And this is where, to me, the efficiency and automation really comes into play, because to take a spin on what Shane said, where, you let somebody know what they need to work on and they can stay in their lane and they can do that. We broke that into, there's smaller chunks. So I hired you, maybe not off the street, but you don't have 10 or 15 years, background in processing that a lot of our folks had. But that's okay, because we've built these tasks and we've built these specific micro workflows so that this is the action you're doing. And when you perfect this, you should be able to perfect this in the next 2-3 weeks. We're going to add on the next one, and we're going to add on the next one. And by the end here, you'll be a full-fledged processor, a full-fledged underwriter, whatever else, right? So it gives us, or gave us, and continues to give us, flexibility around hiring folks and allowing us to drive the work to them based on their skill set, to ensure that we had great quality and great NPS. And right, it gave us that fungibility, allowed the folks to be that way. I actually, Sean, I've been thinking about this a lot, is, as you know, we do retail lending, but we also do wholesale and correspondent lending as well. In the wholesale space right now, it seems like every day we hear of another company closing out and things like that. I keep thinking about the fact that in the next boom that we have, while I doubt it will be as grandiose as this one was, right? I actually get concerned that the number of people that are knowledgeable in our industry, in the operations space, won't be there, right? There won't be enough of them. So to me, that granular ability to drive efficiency and leverage automation to drive sort of augmented process for a human being is important now, but I actually think it's more important in the next cycle, because I don't think you're going to have the same number of folks available to go and hire to fill in a lot of those gaps that you have. So that's the way that we've been thinking about it. What Shane's saying as well, right? Driving efficiency, driving the ability for a user to not have to know what should I be working on next, right? That absolutely is there. We took that, but also maybe went a little bit further as we were trying to ramp up staffing, and realizing that we needed to make the work a little bit more granular so that we could get efficiency out of new folks as we're training them and bringing them up. Mortgage is a very complex service, right? It's a very complex financial offering. So hiring somebody that even has a handful of years background somewhere else, you have a tremendous amount of training to do. How do you do that while also getting, productivity out of them? And one of the things that we did was to break down our tasks through automation and leverage efficiency capabilities within our systems to drive more granular work for the folks.
Blair, I want to add
That's
on.
pretty interesting, Blair. Go ahead, Shane. Sorry, go ahead.
No, one thing we saw going back to '08 is we saw a huge shift in the type and quality of employees that we were able to hire. We lost a whole generation of loan officers after that, if you remember going back that far. And then thinking about operations, same thing. We're going
to do it again, Shane. We're on the precipice of that now. Yeah.
And they're going to retire. They're going to go on to something different because, we can't support the types of staff we've seen in the last 10 years. So training will be huge, and reliance upon that technology to help not only train your employees, but guide your employees is going to be more important than ever. And I couldn't agree with more with what you said.
Yeah, so you both seem to be leveraging technology, not only just from a training perspective, but almost like an upward mobility opportunity for these employees. So you come in and you've got kind of more bite-sized chunks. These are the tasks that you're responsible for. We're going to serve them up to you at the appropriate time. And then once you've mastered that, then you get to move on to the next opportunity from again, an upward mobility perspective. That's
Sean,
super interesting.
Leveraging the capability, we created a processor development program, right, where you could hire somebody off of the street, right? That obviously we interview and hire smart people, but they don't have to have a background and knowledge of mortgage, right, for us to hire them for some of these roles, right? So that we can. Sometimes it's almost easier to teach people really good habits than to unteach bad habits.
Would agree with you.
It's tough. From a management perspective, it's tougher, right? Operations management perspective, right? Because it's just the number of people, right? But overall, that program has been very successful for us and would not have been possible without the ability to break down tasks into granular components and ensure that throughout you didn't lose the quality, right? One of the things that you obviously gain by having sort of single file ownership is you got the one throat to choke and the one person who knows that this is their loan and they know that this new document relates to this old document, and right. So you have to care for those gaps that you lose by breaking up the granularity. And you do that normally. What we've done is we've done that through both systemic evaluation, change data capture, did a data element change that matters. And if it does, create another task. This person's reviewing this document. Just because they've changed something, I don't need them chasing it down a rabbit trail here to find out what happened. But I also don't want to lose sight of the fact that when they changed the property address from Main Street to Main Lane, I want to make sure that that's okay, that my appraisal's okay, my title's okay, right? So a lot of those things we had to build, and that's when I talk about augmenting the process. It's not about automating. Automation is important, and we're trying to do that, but we're actually leveraging the tools to augment the operations process so that we can give ourselves a lot more flexibility and then also ensure that we maintain our very high quality.
Thank you guys for that. For anybody out there who's listening that potentially is thinking about evaluating technology, the way we just talked about this task-based workflow may sound complex, and by the way, it can be. It can get into any level of complexity that you'd like. I think the way Blair is leveraging it is abundantly different than lenders that have been on the platform for a year or so on Empower are doing so. But just making sure you're aware, we've got default task-based workflow built into the system that comes out of the box day one. built on the best practices that we've designed over the last 10 years of deploying this product. So it's a really interesting model where you get to leverage that, again, out of the box, but then start to tweak those dials so that it best fits the really specificity of the workflow within your organization. So just wanted to mention that. So it looks like we've got about 5 minutes left. I think I've got a wrap up slide and we can then open to questions. But before we go there, gentlemen, anything else to add on some of the subject matter that we've talked about today?
The only thing I would add, Sean, is the topics that you were asking about, I think are really, really important, irrespective of it being a boom or a down market, right? In both markets, right? Your borrowers, your users, your loan officers, your operations folks, underwriters, they appreciate efficiency, transparency, communication in both markets, right? So the only thing that I want to make sure that I vocalize is when we separated out here a little bit about this was important in this space and this was important in that space. I actually think that it's important in both, sometimes for different reasons, but a lot of times the reason doesn't matter. It's important to a customer to know what's going on and to be confident in the process, and that's true in both those markets.
Shane, were you going to say anything?
No, I concur with that. And your customers, there's less loans in the market today. I feel like some of them tend to be more difficult. You've got higher ratios, you're dealing with higher interest rates. And a lot of times people, if you think about our rate environment for the last 10 plus years, a lot of your customers have never seen rates this high. And navigating that with them and understanding the qualification process, and it's just a lot more difficult right now. So, that transparency, as Blair alluded to, is so important. And, every loan matters today as it did, in the boom market, but it seems to be a lot more difficult today with some of these customers, especially with affordability. So, you can't lose sight of your customer on the other end of this, because a lot of them have never even seen a rate of 7%.
Right. Yeah, exactly. Well, thank you both. So yeah, we kind of distilled today's talking points into three major subjects here. Again, the investment in technology in a down market, for the reasons that we discussed. The time really is now to leverage these resources, to leverage your past learnings, and to get yourself in a position for future cycles, but also, as Blair pointed out, this cycle as well. Simplifying your tech stack is definitely a theme that we've heard in the marketplace, getting from a compliance perspective on the crowded side of the street, as they say, but also partnering with stable, credible vendors that continue to invest in their technology, and of course have a track record of delivery. And then of course, number three, as we always look to do within the mortgage and mortgage technology vertical, automation, efficiency, and satisfaction. And that's the holy trilogy when it comes to our business. And taking this opportunity again to take a look at where your bottlenecks are, where you can improve processes, designing future state, finding a vendor that can support that future state, and then deploying on that. Okay, so I want to turn it over to HousingWire. I think we wanted to open it up for questions.
Thank you for that. And to our audience, there's still time for you to submit questions for the panel. You can use the Q&A icon at the bottom of your screen. So the first question that I have is, I want to take a step back to that final slide and just go over again why now is the time to reevaluate your tech stack.
I don't want to be cliche, but if we think about it in terms of during the season and off season, right now is off season, right? And champions are made in the off season. So now's the time to invest.
Yeah.
So that we talked about a bunch of reasons why it provides tremendous value now. But the reality is you have an opportunity now to invest so that when it does get really, really busy again, which it will. I mean, if you've been in our industry for more than 4 or 5 years, you've seen at least 2 cycles. So, it's going to get busy again. You'll reap the benefits then, right? So think about, what do I need now, but also how do I set myself up for the mortgage company that I want to be then?
Yeah, and you alluded to the soft spots you saw in your organization and your processes through
Yep.
these boom times. This is the best time. It's like Monday morning quarterback. This is the best time to go back and look at what worked and what didn't, because you have the time, and time is on your side right now. And I think, if you wait and think it's going to, there's going to be a better opportunity, this is the best time when it comes to our business. And we're all a little bit slower, some a lot slower. This is the time to look at your processes, your workflows, how to build your efficiencies, and technology is huge in that. And when you're in a boom market, you might make the wrong choices.
And what would if speaking to the people who perhaps haven't been in the market cycles, for them, would you reframe that answer for the people who are newer, who joined in 2020 or in 2021?
If you joined in 2020, welcome. If you survived that from I had full head of hair. I looked like Sean Dugan then. So that the only change that I would make is this is a cyclical business. It would be education, right? This is a cyclical business, and even though 2020 is the biggest boom that we've seen, right? And we likely won't see that again in my lifetime anyway. At least I hope. I hope not. I hope that the reasons that was created aren't replicated again. But these customers that are today that are getting a 6.5–7% rate, right? Which, by the way, I'm 45 years old. I never had a rate higher than that, but I remember them being higher than that. That was not out of the realm. 3%, 2% rates is actually the abnormal thing there. But those customers that are getting that, 7% rate now, 6.5–7% rate now, basically we're building the next crop of refinance customers, right? Yeah. Because their home values will in most markets likely continue to be stable and over time will increase as well. And their rates, rates will come back down. They likely won't go back down to where they were in the pandemic when money was negative cost, but they'll come back down, and that'll be the time that they're ready to do a refinance. And that crop of customers, every single day that you do loans now, even if you do fewer of them, you're building the next crop of refinance customers. I mean, it's the way our industry works.
Yeah, I mean, when you look at the opportunities for refinance as a homeowner, 3/4 of a point to a point or more, that can be some tremendous savings depending on your fees and costs involved with the loan. So if you got in to this business in the last 2 or 3 years, some of those people you refinanced might have only been in the 4–4.5% range. So you're talking 6.5–7%. We will see lower rates, and there's no question with the environment we're in that the rates will drop. Don't know when, but they will, and those opportunities are going to be there. So build your pipelines. Your future pipelines, take care of your customers today, because they will come back to you because they're not going to want to hold on to that rate very long.
I think that's something, or with the amount of people who I see regularly or who I talk to at HousingWire, who we just spoke to at HousingWire Annual, it's good to contextualize that the market tends to be cyclical. Even Sandra Thompson told me that she just refied her house, taking advantage of rates in 2020 and 2021. So it was kind of reassuring to see her clarify that the rates were abnormally low and that we're seeing a little bit more of an equilibrium. My next question is, what should lenders look for when they're evaluating technology?
I would say reliability, roadmap, those things were important for us, and understanding not just what that vendor is telling you about their product, but talk to people that use their product. Talk to people that have, new users, existing users. That was huge for us. And the roadmap, again, like I stated, we don't have a bunch of people on staff that are going to go build products for us and build systems for us. So we want to make sure that what is coming, we can support from not just today, but in the next 7 to 10 years. And that was important for us to understand where the vendors are in not only short term, but long term. Don't just believe what they say. Do your due diligence and go ask for references.
Yeah, I agree with Shane. The other thing that I would add to that, though, is I have found that the most productive vendor relationships that I've had didn't start with, here's a specific feature or product to buy, right? It started with the conversation of what are our business objectives? And based on those business objectives, what are the overall suite of options that might be available to us, even if we never take advantage of them? Understanding that partnership, right, that you can create with a technology vendor, because you're both solving the same problems, right? You're both trying to reach the same end result, whether that's driving down the cost per loan, right, is a business problem, right, to solve. Being able to create greater transparency and communication for customers to drive up NPS and ensure that customers are very clear about what's going on with their complex transaction. It's a business problem to solve. But if you think about and you communicate, here are all the things that we're worried about, and then that vendor that you're interacting with says, yeah, we've thought about these things too, and we have this to address this one, it's perfect. We have this to address this one, it's not yet perfect, we're still working through it, would love to partner with you on making it better, and I'm sorry, this one we just haven't tackled. It's just not something, maybe we will, but right now we haven't, right? That type of transparency, when I hear those types of conversations with our technology partners, I get really excited because it tells me that we're in it together, right, to solve the problem. And to me, that's the most important thing. That's when I say we have deeper relationships with fewer vendors, that's exactly what I'm talking about.
Yeah, and to add on to that, Blair, if the vendors you're talking to are only leading with products and solutions without really asking you what your pain points are and what your challenges are and what you're really looking for, just like you said, this can handle this, this is not quite there, and this isn't there, they're going to lead with their best. But sometimes that's not everything you need, or that's not what's the most important to you. So make sure that that analysis goes both ways, and that the vendor's actually listening. That's important, and that's, we found through our process that wasn't the case. They were going to come in and give us what they had to offer, and we were going to be wowed. And that wasn't what we were looking for. We were looking for someone to listen to what we truly needed. And so if there's that willingness to listen by the vendor, that's a great start.
Yeah, I would tag on to that and just say, from Blair's perspective, that collaboration is key, and what Shane said with regards to that roadmap or that product investment strategy, also very, very key. And then the third leg of the stool being the track record of delivery, right? So that's great that you want to collaborate. You've got a really healthy roadmap, but show me last year's roadmap and show me what you delivered on within that time frame, right? Very few lenders ask for that type of proof of concept, if you will, from a vendor, and I think it's absolutely material to what a long-term mutually beneficial relationship between a lender and a vendor partner can be.
I have a follow-up question. Do you think that having that product roadmap and having that conversation to approach things as partners helps in adoption once you have the technology?
That's an interesting question. Adoption is something as lead product management here. So oddly enough, there's a technology guy at Citizens Bank. He works in that office there on the other side of that wall. He can hear me talking. So product management for us is really about utilization. It's about determining business problems, determining solutions, and then utilization. Because I don't get judged for delivery. I get judged for use and outcomes. So I spent a lot of time thinking about adoption, and it's an interesting question. I've never thought about it that way. Most of the time, the levers that I use for adoption are getting buy-in from the users, their managers, and their leadership team on why we're solving that problem for them and why not solving that creates a negative outcome. So it's really education. Sometimes the carrot doesn't work, right? Which is the reason why I include their leadership team, because most of the time when we make technical business decisions, they're related to solving an actual business problem, whether that's greater availability for customers in our bank footprint or greater cost per loan improvement, whatever it is, right? And that leadership team has a vested stake in that outcome. And that's the reason why I bring them in on the carrot part, right? Of, hey, this is the reason we're doing this, and we're all aligned, and this is the right outcome. Do we agree? Yes, and you're all bought in. And then the education on how you do it. And a lot of times people, there's a lot of reasons that adoption becomes a problem, right? One is they either don't understand why. That's normally the problem. If you educate on that one, you can overcome that. Sometimes it's, I know what to do. I just know I can't do it. I personally know what the mechanics are to run a 3.5, 4 minute mile. I physically can't do that. I'm just not going to happen. So when you have those conversations, that also comes out the things that you're missing. But sometimes it's really a lack of understanding of that it is an actual problem. And that's unfortunately where sometimes the stick has to come in, where there's sort of, it becomes compulsory, not an option.
Yeah, it depends on the problem you're solving for. Adoption is a lot easier when a clear end or a clear solution is in sight. It's those subtle changes that you make where people don't adopt as quickly or may not think they need to adopt as quickly, where that may quickly change from a carrot to a stick, or at least a nudge. But it depends on what you're solving for. And we are transparent with our people, and I'm sure Blair is too, it sounds like. We want, we love their feedback. We want to hear what their challenges are. We want to hear what their roadblocks and their stumbling blocks are. And that's when we get excited to go back to and work with our vendors and say, can we build this? Do you have this? Can we fix this? And when we do a good job of getting that potential solution in front of our people. And generally there's excitement built around that. And that's enough of a carrot for the adoption side of things. But adoption is, when I was talking to people about the new system, our loan officers, our adoption rate was the slowest because they're the least detail oriented. So it's funny, more training, and sometimes that solves your adoption problem. But it depends on which role typically that falls in as well.
From a technology provider perspective, we really love that relationship with our lenders. So, we've got a lot of smart people here at Black Knight, most of which have sat in the lender's chair, right? So when we're building out, additional enhancements or functionality or components, we usually have a really solid idea. We go through business requirements documents and functional design spec type processes, but nothing replaces the litmus test, that sharing that information with a lender and making sure that the way that we're thinking about it works in the real world, that it meets their particular business requirements. We find that to be really fruitful, and we adopt that wherever we can with our partners.
All right, and we are right at the top of the hour. So unfortunately, we are out of time for today's webinar. I want to thank you, Blair, Shane, and Sean, for going through all of the content for today. And if there was a question that was submitted that we ran out of time for, we will be passing these questions over to the Black Knight team, and you will be able to get your answers after the conclusion of today's webinar. HousingWire will be sending out the recording to all registrants in the next few days, and that webinar will also be available in the Knowledge Center at housingwire.com, along with the PowerPoint that was used for today. Thank you again for joining us. Hopefully we'll see you all again soon.